What is happening with Starbucks? It's kind of crazy. Stock price went down by 40% since the beginning of the year. What is going on with this iconic brand? And most importantly, do I keep it in my portfolio? Dividend investors, bonjour. My name is Mike Héroux, and I am the founder of Dividend Stocks Rock, and I'm also a passionate investor. I run this YouTube channel to help you invest with more conviction so you can enjoy your retirement. And must admit, when I look at my portfolio, it needs a lot of conviction when you want to invest in a stock that is down 40% since the beginning of the year, right? Starbucks at DSR is rated with a pro rating of 4 and a dividend safety score of 4, meaning that it's a buy with a strong dividend growth perspective. The yield after that the stock price is down is now over 2.5%, so it's getting a little bit interesting for income-seeking investor. The dividend growth streak is from 2010, pays quarterly. We all know what Starbucks looks like, but now we have to look what is going to happen in the future. As you can see on this graph, it hasn't been a fun ride since the beginning of the year. So yes, the overall market has entered into bear territory. This means that from the peak level, we dropped by at least 20%. But when you look at Starbucks, it's a lot worse. And as you can see, there was like not really a break. It was just like a downslide all the way down to like $70 stock for the stock price. And you may be wondering right now, is it the end for Starbucks? Because it looks like it's pricing as it goes directly to bankruptcy, right? So let's dig a little bit deeper in the business model, see about the challenge, and I'm going to let you know if I keep Starbucks in my portfolio at the end of this video. So the challenges, I've done this for a webinar, a private webinar for my Dividend Stocks Rock members a few weeks ago, and back in April actually, explaining what was happening with Starbucks and explaining why the stock price was free falling. So the first thing is previous CEO retired. Now Howard Schultz, which is the guy that kind of like built Starbucks as we know it, has like brought this incredible growth inside this business. It's his third time back as a CEO, so third time's a charm. Hopefully it's going to be better later on, but in the meantime, it has been not so well. One of the first things that he decided to do is actually announce that he will not buy back more shares. So there was a share buyback program, very generous. The company was buying back shares like there's no tomorrow. And he just said, you know what, we're going to use our liquidity to improve the business, make our employee more at ease, and to listen to them. Because another of the challenge is unions are popping across many stores right now. So at this point, it's not alarming. We're just talking about 1.5% of all stores calling for a vote for a union, but things could go sour quickly. There was a lot of things that has been written and seen in the media. Employees are not happy with the way it works right now in stores. There are like super complicated lattes that are like customized like there's no tomorrow. It takes 1 billion hours to do. Okay, I'm exaggerating a bit, but you get the idea. Whenever you have like 2 shots of this, 1 shot of that, a quarter of this, and then you shake it, and then you like put it at a special temperature, but you have to wait another 2 minutes before you serve it, and so on. So it takes forever to make. They don't have those resources, and they kind of like feel that it's getting completely out of control. So employees wants to be heard, and changes must be done within those stores. And this is what Howard Schultz is promising. But in the meantime, people are not that satisfied, and the union is coming up. So the market is worried that if you have already labor problems because there's a shortage of employees, and now you have to pay them even more, or you have to hire them, hire more of them, it's going to complicate things, put pressure on margin, and maybe there's a limit to how much you can price your coffee. Would you be willing to pay $10 for your coffee? I don't know. This is something that is also worrying the market, and inflation as general. So not only labor costs will increase, but cost of raw material as well. So we're in a place where kind of like a limiting pricing power, and at the same time we have a lot of cost expenses that are rising, so the market didn't like that at all. To have you a clear picture of what Starbucks is today, they have pretty much as much stores in North America that they have on the international markets. Obviously, their biggest growth vector right now is China, and China's kind of struggling with COVID measures still. So whenever there's a lockdown, it's bad for the business. It's also harder to open more stores. Before the pandemic, Starbucks had a plan to open between 500 and 600 stores per year. Now that has slowed down. Hopefully, it's going to kick back in. But in the meantime, it's a little bit harder. If you go back to North America, another challenge they have is they have a lot of stores in shopping malls. There's less traffic in shopping malls. The pandemic didn't help for that. Obviously, a lot of people now are shopping online. So obviously they do not walk around, they don't order their coffee, and that had put some pressure on volume. Over the past 12 months, Starbucks decided to close down some of their unprofitable or weaker stores. So that will help profitability going forward. They also recently announced that they were going out of Russia, but Russia is like 130 stores. It's not going to affect their total by that much. Actually, they will likely open more stores in China and just compensate it. But all of those things kind of like put a gloomy future around Starbucks. Now, going back to some positive aspect for the company. The one that I love the most is their adaptability. They have created one of the strongest membership system. They have over 27 million members in North America. And with that, it's not only creating a more sticky business because consumers are buying more because they want to get those rewards and so on, but it also provides a huge amount of data to management. So now they know a lot more about their customers, where they want to consume their coffee, what they buy, when they do it. So they can adapt their stores, adapt those menus, and most likely adapt their pricing as well, and adapt a lot quicker than any other restaurant. So they have created this iconic brand. Now they're following their consumers and make sure that they make them happy. Another thing that is quite interesting is while the market is worried about inflation and pricing power, we clearly see on this graph that the company has been able to increase their price without much impact on volume. Management announced that they actually increased their price 5 times in a few years, and they don't see much impact on volume, which is really good news. That is also coming from the fact that it has such an iconic brand, and a lot of people cannot just start their day without their Starbucks coffee. It helps them to push the tickets a little bit higher every single time. Unfortunately, we all know it has a limit. They will need to find more growth vectors because rising prices will be a short-term solution, but you cannot just always do that. Good news is there are still a lot of untapped market for Starbucks, especially in China. They have a lot to cover over there. They can increase their new stores counts by a lot. 500 to 600 per year, as I mentioned earlier. And as you can see now, they have increased their store counts by 10% just from last year. And as COVID is getting under control across the world, my bet is that it's going to continue to increase at this pace and probably faster going forward. So they will likely cover for Russia, cover for all the stores that they closed in North America that they were not performing, and then move forward with a lot of growth going in the next few years. When you look at the dividend triangle, and this is where you're going to find most of your answers, you can see that the stock price is going down like there's no tomorrow. We're getting priced back to the middle of the pandemic. However, revenue is up, earnings is up, and the dividend continue to increase. So whenever you have a companies like this showing you that they are able to grow their business, even though it's a challenging market, even though they have inflation, and then they have still COVID lockdown in their best market for growth right now, which is China, they're still able to manage. And now we have like one of the smartest CEO back here. He has been able to grow Starbucks each time he was in charge. Why would it be different this time? So my investment thesis, whenever I lose a lot of money on a stock, I go back on my investment thesis and I see what were the reason why I wanted to have Starbucks in my portfolio. So quite simple. Loyalty program, iconic brand, a lot of growth vectors outside of North America, and a very strong dividend grower. When I look at the dividend triangle, I look at the current situation, I see all of those points that are still valid. And to be honest, yes, I'm losing money this year, but when I look at the purchase price, I actually bought it in 2017, so I'm still positive on this one. I used to make a lot more money on Starbucks, but I'm gonna hold it for the long term. Again, I'm not holding it for this year, for 2022. I'm holding it for probably like the next 20 years or so. So hopefully we're going to have better news in 2023. In the meantime, it's going to be a rocky road. I'm pretty sure that we're getting closer to the bottom than we are at the top in this case, and I wouldn't be surprised if we hit $100 in a few years again. In the meantime, it's just a matter of being patient, a matter of getting that dividend paid. When you think about it, my yield on cost, so the dividend I'm receiving on the cost of my purchase, is probably around 3% right now. So it's a decent yield. The dividend growth will be more than enough to cover the current inflation because payout ratios are relatively low for Starbucks. So in the meantime, I'm able to be patient, I'm able to wait, and I'm going to enjoy a good coffee. The role of Starbucks in my portfolio is obviously growth. So whenever you invest for growth, you have to expect a little bit more of a rocky road. So it goes up, it goes down. It's part of the process. It's part of the business. Sometimes there's a hype around a stock. You just have to be patient. It's going to come back, especially with a strong brand like this one. So I'm keeping my shares of Starbucks. I will continue to have it as a growth stock in my portfolio. And in the meantime, I'm just going to be patient and it's all good. So I hope that you have enjoyed this video. Give me a thumbs up. Tell me what you think about Starbucks, or let me know which stocks you have in your portfolio that fell down like this, but you still hold with strong conviction. I'm curious to know about your stories. Let me know in the comments. Give me the thumbs ups. Don't forget to subscribe to the channel if you want to have more updates like this one every Thursday morning. And until the next video, don't forget to stay invested.